The whole world's going electric. Tesla's the king of the hill. They just delivered 466,000 cars in Q2, $25 billion, on track to do 2 million cars this year, $100 billion in revenue. The Model Y is the best-selling car in the world, and they're about to launch the Cybertruck. So this is good news for them. But if you look at the big picture, Tesla, 21% of global EV auto share, BYD at 16.7%. But rounding out the top five, two other Chinese companies, GAC at 6%, Volkswagen at 4.7%, and SAIC. So three of the top five selling EV brands globally are Chinese. There's a changing of the guard here.
After a more than 20% pullback, Tesla stock still looks expensive, trading at a forward price-to-earnings ratio of 66. This truly demonstrates that investors are still extremely optimistic about the automaker's business. On the other hand, however, is the claim that Tesla's market capitalization, which is over $700 billion, is making it one of the largest companies in the world, and this enormous valuation could further limit upsides for shareholders, discouraging some investors from even owning the stock. There's no doubt that Tesla stock has been dropping at a significant rate at that, but we believe that the stock will eventually bounce back and probably go up to $300. While this upside may not be as quick as many expect it to be, we know it will eventually happen, and let's see how.
Let's shift our focus now to Tesla and the EV space. Joining me right now, Steve Wesley, founder, managing partner, the Wesley Group. Steve Wesley, I'm so glad you're here with us. I want to talk all about all the EVs that we're watching so closely. Of course, you're a former board member of Tesla. And once again, we saw Tesla cutting prices. I mean, I've heard Elon Musk say they can cut when they need to, but it seems that they're cutting periodically. What do you think is behind that, and where does it fit into the EV space?
Well, you bet. This is extraordinary news. Tesla has just done their sixth price decrease of the year. They're triggering a global price war. And why not? They're uniquely positioned to win the price war because they've got 13% net margins versus Toyota at 7%, Ford at 2%. No one else can keep up. They're doing a global land grab because they can. And I think what's interesting for investors is this is just terrible news for Toyota, GM, Ford, and the others, but it's great news for consumers. EV costs are coming down a lot, and they're soon, probably by late next year, 2025, going to cost less than gas cars. The whole world is going electric.
There's a lot for investors to weigh when valuing Tesla and deciding to buy shares. You see, it's hard to deny Tesla's truly innovative and game-changing potential. If Elon Musk can finally make good on his word and introduce FSD capabilities across its range of models, then the value that's unlocked could maybe even propel Tesla and its stock to new heights. Hey guys, welcome back to Tesla Tomorrow. In 2021, Edward Jones analyst Jeff Window initiated coverage of Tesla with a hold rating. According to him, Tesla is still the clear leader in the global electric vehicle market up to this point. And although the company will face a tidal wave of new competition, its $800 billion market cap at the time was already pricing in a tremendous amount of long-term growth and huge successes in ventures outside of auto sales. He said that he believed the market pricing in 30 to 40% growth in earnings annually on average over the next decade will require successful development and launch of new products like autonomous driving, semi-trucks, and low-cost sedans. Before we continue, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. At the time, this analyst claimed that Tesla will only maintain its current valuation if the global EV market continues to grow rapidly. This was just 2 years ago, and now the firm seems to have grown even more bullish on Tesla. In a recent note, the company's analysts upgraded Tesla from a hold to a buy, and also added the stock to its focus list, despite economic headwinds that are potentially pressuring Tesla's near-term auto sales. Similarly, American financial services firm Edward Jones earlier this year upgraded its Tesla rating to a buy for the first time. According to the firm, Tesla's share price does not reflect its long-term growth opportunities, and the automaker's new product launches will allow it to take advantage of the expanding EV market. Let's take a quick look at what this company is. Edward Jones offers wealth management services, retirement and college savings products, stocks, bonds, and mutual funds, among many others, for business owners in particular. It serves investment clients in the US and Canada, though its branch network of more than 15,000 locations, and 19,000 financial advisors certainly gives it pretty good coverage. The company currently has relationships with nearly 8 million clients and also has around $1.7 trillion in assets under management worldwide, focusing solely on individual investors and small business owners. In 2019, revenue for Edward Jones came in at around $8.5 billion. With more than 15,000 locations in North America, Edward Jones has more branch offices throughout the US than any other brokerage firm in the country. The company's growth has been extraordinary, and its annual revenue has grown from $16 million in 1977 to more than $12.3 billion today. And so for a company like this to approve Tesla stock as a buy, then this is something investors should not take for granted. So what could Tesla be doing right now? Well, let's find out. After ending the first quarter of 2023 as the world's best-selling passenger car, the Tesla Model Y has continued its spectacular sales growth, especially in the United States. The Tesla best-selling model doubled registrations to 127,541 in the first 4 months of 2023 over last year. This record performance means that the Model Y outsold popular cars and SUVs that have dominated the sales charts in the past. As regards to charging, experts have said that Tesla's creation of vast new EV charging businesses will be a massive boost for its valuation in the near future. The car company's taken the bold step to buy its own network, not to turn charging into a profit center, but rather to reassure buyers that they could get across the country without running out of power. This charging business is starting to boom, and it could become a significant revenue source for Tesla. A recent analysis from investment firm Piper Sandler found that in about a decade from now, Tesla's efforts to open up its charging network to other car manufacturers could generate the car company upwards of $5 billion in revenue annually. Likewise, Jonathan McNeil, a former Tesla executive who now sits on GM's board, said that this is always a bit of an AWS moment for Tesla. McNeil claimed that Tesla is taking something that's been a cost burden for them and turning it into a revenue source. We also can't forget Tesla's strong support and fan base. At the root of Tesla's stunning performance is an army of supporters. Fans of the EV maker care little about its quality control issues and controversial CEO. Instead, they see Tesla cars as alluring for their styling and performance and the fact that they're new and different. It's impossible to know for sure if or when Tesla will surpass $2 trillion in market value. But given its superior positioning in a massive secular growth industry, it's fair to say that the company will eventually reach that point, and in the case of a pullback, it should only serve as a nice window of opportunity to acquire the stock, especially considering that Tesla's business continues to expand at a rapid rate. And despite the market challenges, Tesla is still making waves in the industry, unlike most of its competition who are struggling to keep their head above the water. Even though it's currently not at a very high rate, Tesla's stock price is going higher into the positives. We know this because market factors have shown to be of great advantage to Tesla. Considering Tesla's car demand, the automaker is likely to be more beneficial when it's striking deals with big companies, be that of raw materials, superchargers, FSD, and a whole lot more. But what do you think? Let us know down below, and let us know what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.